Yeah, my name is Darius Coveney, CFO and COO of Fluent Commerce. We're a global distributed order management SaaS business based out of Sydney, but with large clients all around the world. When I talk about Fluent Commerce and what it is that we do for retailers, I always talk about letting them know what inventory they have, where it is and how they get it to their customers. That where and how of modern retail. What we can do is we can help the retailer to manage their inventory in real time, and we do that for some of the world's largest retailers. And so whether a customer wants to buy online, pick it up in the store, or whether the retailer needs a solution where they can ship from store, use the inventory they have in a store rather than just in a warehouse, we're the engine that sits behind that seamless experience for the customer. As Fluent Commerce scaled globally and our growth was accelerating pretty rapidly, while we raised equity and equity was a great foundation, we got to a point where really we had an opportunity to be a bit more surgical with our balance sheet. We needed a facility that would allow us to optimize our working capital, but kind of bridge that gap between the R&D roadmap that we had and sort of the pretty ambitious global expansion we were trying to put together without further diluting our shareholders and that equity capital. So it was about having some flexibility to be more thoughtful with our capital allocation. January's a multi-strategy platform, so they didn't think of us and look at us just through a narrow lens. They understood that we were a high-growth SaaS business and the nuances that come with that, kind of probably in a way that a traditional lender might not. They were flexible, they moved with speed, we got it done pretty quickly, and they felt like an extension of our existing investor base. We'd built that relationship over time, so I think having spent a lot of time with the January Capital team, both on the equity side and then later on the debt side, I think we built that trust over a number of years before the deal even happened, which made it pretty easy to put the debt deal together. Yeah, so the partnership was a success. We utilised that growth credit, we hit our milestones, we managed to maintain momentum through what was a pretty hard time in sort of global economics. And then I'm proud to say that last December we paid that facility back in full. It did what we hoped it would do. It fueled our growth, but it also got us to grow to the next point where we could go and access other pools of capital that we didn't have access to sort of beforehand. So I think it's a really good example of how the right capital at the right time can really change a company's trajectory. I think Fluent Commerce will continue to grow globally. We've sort of done a pretty good job in Europe. We've got a lot to do in growing in the Americas yet. We see an opportunity for our software in a space that's been pretty stale for a long time. So we will continue to innovate and we'll continue to push boundaries of the big software providers in that space. And I think Fluent will continue to grow out of our base here in Sydney. And yeah, hopefully we'll be a multi-billion dollar business in 10 years' time.